Hi, Kevin Blanch. I want to talk about the stock market over the last little while, and you guys as fund managers, if you guys evolve to be fund managers, or for that matter, your own 401k or your own money. You know I've been anti-401k for years and years and years and years. I don't believe in them. I think they're a fallacy. But, you know, if you're getting matching funds, whatever, and you're going, learn how to manage one yourself. Look, why do you think I don't care when my plaster business, I won't lower my prices? The hedge fund industry, when I get in a big fight with them. The endowment, I imagine, told them to off. My teaching contract dispute, why do you think I don't care? I'll tell you why. Because I know how to manage money. And that is the key, really. It really comes down to when the masses are bailing out when they shouldn't be bailing out, and when they're going in when they shouldn't be going in. It means everything. It means everything. You watch, and you know me, I don't like to buy stocks. I play the derivatives. Well, on the election of Obama, when that happened, I told everybody I'm going all in one stock. I had a bonus check coming from an endowment that I used to manage. That, well, you guys know this endowment. But I bought, on margin, fully margined up 1,000 shares of Apple. And I don't buy stocks, but I did. Well, I'm to the point, you know how activist I am as far as the jobs in America. I can't own that stock. I really can't own that stock anymore. So I've been playing the derivative. I sold my stock recently. The hedge fund that I worked for, as I bailed out of the hedge fund, I bet my boss that Apple would see 200 when it was at 90. $10,000. We doubled down at 300. We doubled down again at 400. Here's my price target. By April of, seriously. And if you've been watching my videos, when everybody and their brother, including Kramer, including every CBNBC, including the fund managers the fund I used to work for, panicked out in August. You see my videos, I said, do not panic out. As fund managers, a lot of students have come through, right through here, who I've taught, who are fund managers. That's the difference. But it isn't just about the fund. You know, I'm talking in a broad context, people that are managing huge sums of money. It really means everything if you're a good fund manager or if you're not a good fund manager. But in the context of your own money, when the fear comes out, look, I'm a fundamentalist. I want no part of technicians. Granted, you play a role, and if it works for you, more power. But I'm a fundamentalist. I'm about earnings. I put up a video just a few days ago about the Greek bond, saying everybody and their brother short, it's going to fail. And Kramer, I love the guy. He's brilliant. He's genius. But he tells you go in one day and out there. Understand that when you're watching these CNBC pundits and whatnot, they're not about making you money. They could give a rat's ass. They're politicians. He has to pander to his people. You know, and he does what he does. They all do what they do, but they're morons. Do not pay attention. Now look, as an investor, I said, I don't even give a damn if I work, 2 and 20. I manage some people's money. I had a guy here recently, I've been managing his money all summer, that he doesn't like the 2 and 20. That's how the hedge fund industry works. We take 2% fee, 20% of them. I take 20% of what I beat the market. Now, I'm out of the hedge fund industry time. I think I might go back in. I don't know. Well, you guys know, I got a contract dispute going on with teaching, but I might go back into the industry. But as far as the market, look, it's really this simple. Okay, you hear about diversification in portfolios. Well, here's how I diversify. Okay, 1,000 shares of Apple. Do the math. Okay, do you think I live all that layout there? Even though I own 1,000 shares of freaking Apple, which Steve Jobs, and I'll tell you why Steve Jobs will not go down in history as the greatest CEO of all time. He will not. He's the most brilliant, innovative CEO. Oh yeah. You think about what he did with Pixar. The man's incredible. What a mind, what a brilliant. But the one thing that's going to stop him, the China exploitation. That's why I won't own the stock. I buy the derivative. I'll buy out of the money if I had to, but I buy in the money. I'll buy in the money when it's a big chunk of money like this. But if I'm speculating, okay, say I have $390,000 in an equity like that. Okay, I'll park that in cash. Okay, I'll go $90,000 in the derivative, in a call, in the money. And I'll find where the break is. That's where I get technical. I'll find where that break is. Through the, well, you guys know. I mean, there's some of you guys in here can rattle off that delta formula, percent change over time out of your head. This is what this is all about. Now, as I buy that in the money, I'll have a call in case something catastrophic happens, like airplanes into a building or something nuts, or a tsunami, you know. And you can play this with any stock. That's how you have to manage your money as a person, personally. Personal wealth. That's how you have to manage it personally. You know how my science fiction economics, I'm no fan of Greenspans whatsoever. What they've done to the working class American, I think, is criminal. But how can these corporations not make money? Honestly, they've got labor for 37 cents an hour in China. They're paying no freaking tax. Look at the equation. Why do you think these corporations funding, and they says, oh, we're worried about the future, so we won't put our money back. That is BS. That is total BS. They put their money over there as tax avoiders. It is pure tax shelter. They laugh all the way to their Swiss bank accounts. We have set up a system with 0% interest, cheap labor, to where how corporations cannot make money. These are good times to buy equities if you're a fund manager. Now granted, I don't want to participate in this whole freaking exploitation of Chinese labor. I'm totally, absolutely against it. But it is what it is. And we have to have money. And we're going to do what we do. We didn't create this monster. I surely didn't create this monster. I've railed against it from day one. And as far as Steve Jobs, I call him Steve No Job. Brilliant, incredible genius, what he's done. But as far as the exploitation of jobs in China, I'm so totally against it. But, again, you guys have to manage money. You have to do what you have to do. Okay, as far as the market, it's an incredible time to invest right now. It has been. This summer, you guys watch my video I put up early in the morning. You'd be up at 5 o'clock in the freaking morning. You only get a few days a year like that, maybe even every 3 years. It makes all the difference. If you're managing say you're managing several $100 million. Do you know what that move in August meant? And as far as bubbles go, I like to say science fiction economics, .com bubble, housing bubble, hope bubble, brought to you by Alan Greenspan and the GOP. You know how political I get. Well, anyway, this might be my last lecture at this university for a while, but we'll see how things evolve. I might go back in the hedge fund industry. But those make all the difference in the world. You only get a few days like that. You have to have the gut and the instinct and the knowledge. Not to get caught up in popular, contemporized mass media. If you're watching CNBC and you're watching CNN and you're watching Fox, you fall for this, you're going to end up with no money. You're going to end up not being successful at what you do. And managing people's money, the one fear of managing other people's money is losing their money. You're not going to be able to sleep at night. You know, that's why I like to manage my own money. And through the derivative market, if I work for a hedge fund, I like to sign contracts because it's tough. It's a tough gig, and it will affect. If you got a conscience, of course, a lot of those guys don't have conscience. But there's times to get out, like there was in 2008 early. There's times to stay in, but never go all in. And as far as gold goes, I still call it a bubble. I mean, things do not do this. They don't ever, in the history of finance, in the history of economics, in the history of money. It doesn't work that way. This thing's going to fall. You know, will it go to 25? Maybe. I don't know. But when it falls, we know that things fall, what, 5 times faster than they raise? That's where most of the wealth's made on Wall Street, and that's where good hedge funds make their score. If you own that stock and you've got the derivative, you think they're overpriced, you play that derivative out of the money underneath it. That's where real huge wealth is made. Kevin Blanch, stay with me.